All right, guys, welcome back to the Independent Investor Channel. It's great to be with you. The reason why I roll out these bond portfolio reviews, the fixed income aspect of the portfolio, is really just to demonstrate from a comprehensive perspective where I'm at with my allocation when we're talking about comparing equities to bonds. It's super important to understand this because it really goes hand in hand with your risk tolerance. So your risk tolerance is going to drive where your allocation should be. Now, I'm somewhere in between a moderate aggressive and an aggressive investor. So by declaring this portfolio for you guys, I'm going to drop you into 3 snippets. I'm going to show you the portfolio and disclose that to you guys. And then I'm also going to show you the percentage of allocation of the bonds versus the cash versus the equities in the portfolio. And this will really be telling for you guys on how it is that I deploy my capital across strategic aspects of the portfolio with regard to my allocation. So I'm going to drop you into the bond portfolio, guys. Please enjoy the disclosure. All right, rock on. So I thought I'd bring you guys in here and just show you one little snapshot of the bond portfolio. This has been interesting for me. I really just started introducing a segment to my portfolio. This is outside of the Roths. This is in a taxable brokerage, so I can let these kind of grow independently. And this is what I've got. And just shy of 20,000 in here. The ticker symbols here to the left-hand column. Looking to gain this bond exposure that would be appropriate for somebody with a moderately aggressive or aggressive risk profile. I've kind of talked to you guys a little bit about how I feel like I'm kind of right in the middle of those. But I've really enjoyed owning these bonds. They've actually gone down pretty good. They came back there, which gave me an interesting entry point. And they've actually been kind of on an upswing with what I think is kicking up with a little bit of volatility. But it's fun to watch these perform when the market really gets cranky. On like Friday, for example, when the stock market fell, this bond portfolio was actually the bright spot. Overall, it was pretty cool to watch, but definitely have some. I've covered these before. But over the U.S. Treasury offerings and the corporate bond side of the house, in all 3 of the durations, short-term, medium-term, and long-term duration bonds. I don't have any extended duration, which would be bonds over 20 years. I've just got the shorts, and I do have some a little bit of exposure in my in my thrift savings plan as well with work. So that's kind of why I justify getting more intermediate term and long-term exposure here in this particular portfolio, and then I supplement with the G fund, which is part of the TSP. So just to give you a quick snapshot of where I'm at here, and I'm going to kick you over here and show you the allocation details. All right. All right, guys, I really enjoy bringing you into this section here. This really helps to demonstrate. I always say 1,000 words are spoken by one photo, to be honest with you. It's easier to demonstrate a lot of pretty complex numbers and graphs if I just show you where a lot of the information for the portfolio rollouts come from. And this is really cool, man. This really shows where I'm at. I did mention this stuff, and this is some of the value that I throw out there on the live stream. It's just unfortunately I don't do, OBS streaming where I do this real time during the live stream. I think eventually we will work toward it and integrate these 2 products when I'm trying to explain where I'm at here with the stock market in its current condition. With the asset allocation, you can see the pie chart to the left shows really where I'm at with the 70-20-10 that I talked about. Give and take a few percentage points there. You can see 73.54% in equities. Now, this does not account for my TSP account, and it does not account for my liquid cash. Okay, these are just the invested assets So please keep that in mind. The percentages would be drastically skewed more toward the cash. This is just cash that is available idle in the 3 accounts that are represented here. So that's where the 17.97% cash comes from right here. And then finally the 8.49% to fixed income. That's a little bit more toward an aggressive allocation. Certainly I toggle back and forth between aggressive and moderate aggressive. Moderately aggressive kicks me up to well over 20% of recommended allocation, and that's a little bit too much exposure for my particular risk tolerance than where I want to be right now. But nonetheless, we're looking at an allocation detail as indicated there, 70, 20, 10 is kind of a sweet spot for me right now. If you move over to the equity size and style, this is kind of cool to see that I've introduced a significantly larger position in international equities, still severely underweight, which over time we can look to improve that. I'm not overly concerned about it. We have improved upon our equities blend position just a little bit, and then definitely improved upon our small and mid-cap value and small and mid-cap growth at 3% and 4% respectively there. Obviously the portfolio is dominated by large cap growth and large cap value. I said that a lot of those large cap growth stocks that fit into the growth category are really more growth than income. I don't want that to be misconstrued to mean your Facebooks and your Googles and Nvidia and Amazons of the world, but some of the stocks that I do hold fall under that, the growth and income, and then of course some of the dividend payers that are in there are represented in the large cap value aspect of it. And then finally the fixed income. You can see how I've split the world up there. I use the allocator tool to help me understand how much intermediate term bond exposure I should have, as well as the long-term bond exposure, and finally the short-term bond exposure. So you can see there how the percentages break down. They're just represented exactly the same as they are in the pie chart down below in the numbers, but I thought this was kind of a cool breakdown to show what I'm talking about and how I'm currently allocated with my current investable assets when we're looking at equities versus fixed income, and how much cash is idle right now on the side with the current condition of the market. So appreciate you guys kicking in here with me. I'll kick you now to the next screen. Thank you. All right, guys, welcome back out of the portfolio review here. This was the fixed income aspect of the portfolio. This is held outside of the self-directed Roths in the joint brokerage account. I really hope you enjoyed how it is I seek out my fixed income exposure in that aspect of the portfolio. You know, and why I'm allocated the way that I am. That's the real takeaway. And for a lot of you guys, the question is, should I have some fixed income in the portfolio currently? And it'll help you kind of answer that question and understanding how others are seeking out their asset allocation with regard to equities versus the bonds in their portfolio. All right, guys, so if it's your first time tuning in, you want to hit the subscribe button, leave your comments at the bottom of the video, and of course, share the video with anybody out there looking to find some information on investing on your own. This is a self-directed channel on the Independent Investor channel. Thank you so much for tuning into the video, and good luck in your investment future.